pressure on account of those earnings which failed to enthuse the market. On the other hand, ICICI Bank is inching to fresh highs, 1230. In fact, we should pull up the twin chart and see how both of them are performing right now, because ICICI Bank is supporting the index to the tune of 40 to 50 points, and that's completely getting undone by the pressure that we are seeing on Reliance Industries right now. That's contributing almost 50 points on the downside. So clearly ICICI Bank fighting in for the bulls, while you have Reliance Industries which is under pressure right now. What else is happening in the market? Well, HDFC Life just came out with its numbers, and while the growth figure was pretty much something that was liked by the street, it is the VNB margins that have come in lower than expectation, and that's the reason that stock is under pressure. In fact, it suddenly tanked. It's down almost 2.25%. We'll get Gaurav to join us shortly and talk a bit more about that. But it is that miss coming in on the VNB margin bit which is causing that slide in the stock, down almost 2.5%. Bajaj Auto, which reports its numbers tomorrow, is also in focus. Overall, the expectation is decent, but nonetheless, that stock is going weak into the earnings. Not sure if the street is reading too much into the expectations right now, but definitely on the back foot as far as Bajaj Auto is concerned. Wipro, which was doing quite well in the trading session yesterday on account of enthusiasm of bonus issue, is under pressure today. So a cut of almost 2.5% there. But overall, I think, Aisha, it's only the bank nifty that's something to talk about. Whether it's Federal Bank after that 5% up move today, Citi opened a catalyst watch and that's in the green, and ICICI Bank. Rest of the market is fairly somber.
It is, and dragged lower by Reliance, which is at the session lows now. The stock is down a good 2%, and that single-handedly itself is weighing heavy on the index, as are some of the oil sensitives as well. So look at ONGC, one case in point, started off sharply lower. Let's check in on where that stock is. Still down about almost 1.5%. So ONGC, Reliance put together itself is weighing heavy on the indexes. Though on the other hand, BPCL is holding out well. So are the other OMCs like HPIOC. The Brent movement clearly benefiting these. Having said that, earnings reactions coming in thick and fast. HCL Technologies, that stock definitely had a little bit of an iffy sort of start, and now it's finally firmed up around that 1865 odd level. Having said that, like Anisha flagged off, Wipro, Bajaj Finance, Hindalco, Tata Steel, JSW Steel. So sectorally, you would have to say metals is that one weak trend that you can draw up, other than, of course, oil and gas heavies like Reliance and ONGC. Angel One, though, much contrary to the rest of the market, that's definitely having a field day. And what a blowout set of numbers. They've seen a 44% uptick coming in on their PAT alone, a 39% revenue uptick of 44.5%. And they've mentioned that the brokerage hike is going to offset the true to label free impact, and that the F&O norms may actually impact their businesses or their total income by about 13 to 14%. But they're saying that they're going to hold on to the EBITDA guidance, that of 45 to a staggering 40% on the lower side. That stock gapped up, and since then it's only been lapping on more gains, 13.5% of an uptick coming in on the stock price right now. But let's welcome on board our experts. We've got Naresh Mirani, Chakri Lokpriya joining in on the show right now. Naresh, first a word on the index, and more importantly, how much more weakness do you see on Reliance Industries in particular?
So overall, if you look at the chart for Reliance Industries, the stock has now given up all the gains from the start of the year. So in the start of the year, we were at 2600 to 2700 band. That is where it's come to. Back in 2023, if you adjusted out for Geo Finance, the stock was closer to 2400, 2500. So not much downside left here, sub 2700 mark. I would expect it to find a base around 2650 to 2600 mark in the short term, and then make a slow and steady comeback. And from the top, from 3200 to 2600 would be a good 15% plus correction. So a decent correction done, the second largest weight in the Nifty, creating pressure on the index. But overall, decent enough correction is done in the stock. We could make a slow and steady comeback after, say, from 2600, 2650.
Okay, so that's the take coming in on Reliance Industries, definitely under pressure. But Kunal, what's the view on ICICI Bank? That one is powering ahead, up almost 2% right now. You see further gains on this one?
Yeah, looks like, and it seems like finally the stock is finally finding its strength back again after almost like a 100-point correction from 1330 approximately towards 12, 30, 40 mark for ICICI Bank. The stock is finally trying to make a comeback of sorts. It's lagged behind in this recovery phase in the last 4-5 days as compared to many of the other peers. So I think Kotak Bank is one of the strongest name, which has given a higher price rally as compared to the likes of ICICI Bank. But nevertheless, I think if ICICI Bank manages to scale past about the 1265 barrier, then I would probably believe that it should be trying to come back to the 1300, 1320 levels. So this looks like a formidable comeback, and with yesterday's price action move for the other private sector banking names, HDFC Bank, Kotak Bank, Axis Bank to a larger extent, I think this could probably be an indication that maybe the sector is trying to get back into a revival.
Right, okay, that's the take coming in on right now the markets. In the meantime, Reliance, it's managed to hit an 8-month low intraday, and it's seen a breakdown from that 8-session consolidation that the stock was going in with into its earnings. The decline, in fact, has been for a third consecutive week so far. Other than that, Chakri, wanted to ask you whether any earning has actually, or even for that matter, any of these quarterly updates have really sort of stood out, either on the upside or the downside?
One of the big trends that you're seeing is, consumer companies are facing margin pressure. Individual companies are reporting revenue growth, in line with inflation, about 6, 7, 8%. And earnings power is clearly not evident in most of the sectors. Credit growth, on the other hand, is 81 bonds. State Bank of India is going to raise for a few thousand crores. That's an indication of good, strong credit growth. So I think it's still banking, industrials, where strength is still there, power. So it's still very selective. We can't buy like last year, and the other sectors still don't have the power.
But since we're talking about earnings season, and earnings which have come in today are HDFC Life, not very impressive when it comes to VNB margin. But what are the other internals like, and what's your verdict on that one, Gaurav?
Well, yes. When we look at HDFC Life's numbers, there is some disappointment that we're seeing. So first, when we talk about AP growth, it was actually healthy. If we look at first half of the numbers, it grew almost by 31% on a YY basis, which gives us an implied growth of around 27%. When we talk about VNB, there we saw a growth of around 17% on a YY basis in second quarter. Again, it was in line with what the street is expecting. But again, when we come to VNB margin, which was actually the thing in focus, there we saw a little bit of disappointment. VNB margins have come down to 24.6%. Which gives us that implied, if we calculated it at an implied level, for Q2, those VNB margins have fallen, and that is the reason why it is weighing on and the stock price right now. Apart from that, company has given some positive commentary for the company. What they are saying is that the private sector share for the company HDFC Life has increased almost by 60 basis points. They have also highlighted that when we talk about persistency ratio, there we have seen a little bit of improvement. 13th month persistency increased almost by 120 basis points. Solvency ratio is again at a healthy level of around 180%, and the top line growth reflects around 22% growth in the product mix. But overall, when we look at VNB margin, a weakness in VNB margin is something which is weighing in on the stock right now. As we speak, it is down almost 2%. Definitely waiting for how the commentary comes out for VNB margin and the outlook for FY25.
Okay, so that's a take coming in on HDFC Life. Definitely some sort of a miss on some parameters, but HDFC AMC also just came out with its earnings. It's a decent show, at least as far as profitability is concerned. 577 crore versus 438 that they reported last quarter. The stock is holding up okay, in the sense it's off the highest point of the trading session, yes, and maybe the expectations were a bit more because the revenue growth has been strong at 38% year on year. If I can quickly get you, Naresh, on the chart check of a couple of these stocks, HDFC AMC as well as HDFC Life.
So HDFC AMC is the promising one out here. The stock crossed into new all-time highs today. As pullback post the numbers, but the structures is still positive. Till the time it holds above 4,400 levels, would expect it to continue in this momentum on the positional basis. In the short term also, sustaining above 4,600 would be a good confirmation of a trend change above the new all-time highs. HDFC Life, on the other hand, this zone has been a problem zone for the stock. Back in 2021 also, the stock made a top around 750, 770. So it's a stiff resistance, needs to sustain above 770 to create a fresh trend change. The last time the stock was here was back in start of 2021.
Right, okay. HDFC EMC just reacting to its numbers, as is HDFC Life, down now almost 3%. We'll take a very quick break, come right back. We'll address the other newsmakers on the other side. Back with closing trades right here on ET now. The closing trades definitely a little bit under pressure, not quite the quiet start that we started off the day with. Those jagged edges haven't been quite deep, but definitely it's not been a smooth straight line. BPCL, ICICI Bank, Britannia, Bharti, they continue to hold up, as does Asian Paints. But Wipro has now slipped almost about 4%. It's pretty much undoing most of its yesterday's gains. Bajaj Auto down about 3.25%. There's Bajaj Finance, which is down. And metals is a basket as well. Tata Steel, Hindalco, JSW being some key pressure points. And Nalco as well, which is down about almost 4.5% as we speak right now. Reliance too at the session lows. It's drifted even further, a little lower than 2% on the futures at least. And then of course there's Bandhan Bank as well, which has slipped about almost 3% as we speak. Though on the flip side, talk about some of the winners from within the volume market. An MGL, Apollo Tyres, PVR Inox has shot up about 2.25%. Deepak Nitride is looking smart, and the entire OMC basket as well continues to hold up. Kunal, you think this move in OMCs could be short-lived, because we've seen pretty much of a reverse as well, when you had a spiral up in crude?
I think BPCL and HPCL, both of them are technically very strong right now. So IOC is the only one which is very weak, or relatively weak rather, out of the three names. But the moves for BPCL and HPCL are backed by strong volumes. And in fact, what we've also seen for both of these names is that consistently these stocks are bouncing off from closer to their 50 DMAs respectively, or forming a short-term bottom on their previous major swing lows, maybe plus or minus 0.5%, 1% as a buffer range for these stocks. So I think on the basis of the recent chart patterns, I would actually believe that this could be a breakout move for BPCL and HPCL. So maybe not at current levels. Looking at the market texture, the sectors which rally up higher, they generally don't get to see a follow through up move the immediate next day. So I think if these stocks scale down by say 0.5%, 1% odd over the next couple of days, that could be a good entry point for these names.
Okay, good entry point for these names. But take a look at crude, been very, very wobbly. Of course, it was below the $75 per barrel mark when we started off the trading session. Right now, it's inched lower than $74 to the barrel. Right now, around that 73.96 mark as far as oil prices are concerned. And globally speaking, you have the European markets which have opened in the red right now. So it's a cut of anywhere between 0.5% to 1% coming in. The US markets in terms of the pre-market are a bit wobbly. There's Dow, which is just mildly in the green, but Nasdaq futures are suggesting a bit of a downside. So overall, a bit of a wobbly setup that we have in terms of the global moves right now. But it's Hyundai IPO which is the biggest talking point in the markets right now. So Chakri, wanted to get a better view from you, if you have studied that one closely, as to what's your verdict on that one, subscribe or avoid?
Yeah, Hyundai is a well-known brand, not just in India, outside India. Within India, they probably have about 15 models. They are the second largest car company in India. And, they have the ability to grow both inside India and also benefit, the Indian company benefit from export volumes of cars manufactured within India. They're also investing, quite a lot into the new EV setups, so that about battery storage, battery lineups. They also, some of the IPO proceeds are earmarked for that purpose as well. So with all this in mind, being second largest Indian company in the passenger fast growing EV segment, will trade at about 23, 24 times at IPO price, which is, I think, a very reasonable valuation, and therefore, it's clearly worth buying.
Okay, clearly worth buying. That's the view coming in. Thanks, Chakri, for that. But in the meantime, there's a bit of a pressure on divis as well. And it seems like it's stemming from the fact that Novartis has lost battles in one of the FDA approvals. In fact, if we can, let's take it across to Varun, because he's joining us to talk to us exactly what the implication is of this one. Varun, tell us more on divis.
Well, so let me first take you to the news, because Novartis has lost the bid to vacate the FDA approval for its blockbuster heart failure drug Entresto, and this case was between MSM and Novartis. So actually what happened is in the month of July, MSN has actually got an ANDA approval to launch the generic version of this heart failure drug, against which Novartis went ahead and they have filed a lawsuit against MSM. Earlier this month, the US District Court of Delaware has actually ruled against Novartis for blocking this drug, and now the federal judge has rejected Novartis' plea to stop the generic version of this drug. Now this is a big win for MSN and it is a loss for Novartis. Now how will this impact Divi's? Because Divi's is actually having a CDMO contract with Novartis, and Divi's actually supplies the API for this heart failure drug, that is Entresto. And if we look at the recent Kotak note, Entresto actually contributed around 8% of total sales of Divi's in FY24 and around 19% of its total CDMO sales. So it was a blockbuster drug for Novartis and one of the largest drugs in Divi's CDMO portfolio. And as per Kotak, this approval can lead to around a downside of 10% in the EPS of Divi's for FY26 and 27 and 3 to 5% downside for Divi's for FY25. So this is a big blow to Novartis and also a big blow to Divi's. But also remember, there are other companies other than MSM also who actually have ANDA approval for this drug, and they are Alembic Pharma and Zydus Life. So also keep a watch on these two stocks.
Okay, Pharma once again back in focus. Let's also get in some closing trades as well before we slip into another break. Kunal, what's on your list?
So Siemens is something which is looking attractive. The stock forming a flag pattern breakout on the hourly charts, breakout of that 7,750 barrier for Siemens would suggest a buy at current levels, and expecting the stock to come very close towards the previous major highs of 7,900, 8,000 plus levels.
Right, and Naresh, what about your closing ideas?
So looking at LIC Housing Finance, the stock has corrected from 800 plus levels all the way to 600. And this was the price point which it made almost the low around 4th June. So out there expecting a bounce back from here, keeping a strict stop loss below 618, expecting a bounce back to 660, 700 in the short term.
Okay, let's take a very quick break on that note. Thank Chakri as well for taking the time out and joining us. When we come back, of course, the last half an hour of trade this afternoon.
Welcome back. Well, HDFC Life was under pressure reacting to its earnings, but you also have ICICI Life coming under pressure as a rub-off impact. So that stock too will come up for you on the screen. Angel One, of course, is now up 18%. So it started off on the front foot. From there, it's been just building on gains, an 18% rally there, and it's taking along Motilal Oswal with it higher. So there is that sort of jubilation across all of these brokerage companies. 361 will also come up for you shortly. That one too is holding up with a gain of around 4-5%. The other important news flow that we are tracking and waiting by for is the announcement date for Maharashtra election. It's expected to happen at 3:30 p.m. today. There is an ECI press conference at that time, so we'll get to know what exactly are the dates for the elections in Maharashtra, and that of course will be important to track as well from the political angle, which does play a part when it comes to the markets as well. Overall, what else is happening in the market? While on the losing side, you do have Godrej Industries down 6%, Oil India, Nalco, Bajaj Auto, Wipro, Bajaj Finance, they are all coming under quite a bit of pressure right now. Devang Mehta also joins us on the show right now. Devang, hi. Good to be speaking with you. Well, what do you make of the IT earnings? It's been very divergent. We have two numbers so far. TCS was fairly weak, very uninspiring at that. But HCL Tech, good all-round performance. What's your takeaway?
Anisha, for having me on the show. Good afternoon. I think, yes, probably in the entire results season, earnings season, not only in the IT sector, but you will see a lot of divergent results as well, right? You saw something in the FMCG when there were updates announced that Dower was a poor update and Marico was a good update. But yes, coming back to the IT sector, I think clearly, I think probably the tailwinds are now going to come in the next 6 months, if not right now. I think the demand environment, if US does not, all chances that this does not happen with the rate cuts which has already been implemented, and across the globe we are now going to see maybe the rates heading southwards. Also, if you look at the commentary of both TCS and HCL Tech, though TCS numbers were not up to the mark, but commentary was not as weak, and the stock did not react hugely negatively as it used to do earlier. For example, Infosys or TCS would correct big time if the numbers are not delivered or if the commentary is weak, but we didn't see that. Secondly, yes, HCL was a very good set of numbers. Almost the guidance was met, and probably also the commentary was quite strong. So my sense is that this is one sector which seemed to have sort of bottomed out. From here on, there is less downside. But if you are wanting something that is an 18-20% type of a compounder, this sector does not seem to have that type of flex. It can at the best be 10-12% type of a compounder with 2-3-4% type of constant currency growth.
Right. Devin, take a look at Ola Electric. I mean, of course, it's been through that entire slide that the stock has seen after all those issues that happened with their service complaints. But it seems that they've kickstarted, they've hung the festive season on an electrifying note, and it seems that they've managed to consolidate their market share at about 34%. Do you think at 89 thereabouts you may be looking at nibbling into the stock?
Not particularly Ola Electric, but honestly, if you look at this space, be it the EV space, there are alpha ideas, be it through two-wheelers or be it through four-wheelers. But I think across the value chain, when you have an electric vehicle, however, the charging stations or the power stations which are required for this, the entire transmission network, plus also auto and auto component. There are companies like, just an example, like Sumi Wiring, which does a lot of wiring for electric vehicles, particularly for cars. It does across the value chain, be it normal car or smart hybrid, or even an EV. So there are a lot of such alpha candidates which if one looks at this, you also know that there's a bumper IPO which is right now going on. So I think auto industry, auto component that went through a difficult phase post-COVID for the next 3 years, but last couple of years, while the aspirational Indian has come to the fore, I think auto and auto components, there are a lot more choices available than only Ola Electric. I'm again, as I said, I'm not recommending or not saying not to buy, but we don't cover that I can say so comprehensively. But that's where I think a lot of auto and auto component presents with a lot of opportunity.
So that's the view coming in as far as Ola Electric and some of these OEMs are concerned. But it seems like Bajaj Auto is the one which is coming under pressure. It's down over 3% in the trading session. It comes out with its earnings tomorrow. What exactly are the expectations? Let me take it across to Shrishti to find out more.
Well, not much of a weakness is expected onto the numbers, but definitely the margins will be the key to track, because the main highlight for Bajaj Auto in this particular quarter is the difference in the mix, because after a lot many quarters, the mix has changed for Bajaj Auto. This time we are getting to see that there is more contribution from the likes of the CNG and the recently launched CNG bike that could actually impact the mix, while for Pulsar, the sales have taken a back seat for a bit, and all of this could actually impact the margins, where we are expecting not much of a jump. 20.1% is our expectation, which will be a marginal jump on a YY basis, but just a flat margin on a quarter-on-quarter basis. But barring the margins, we can expect a double-digit growth on all the rest of the numbers. Look at the revenue. We are expecting at 13,305 crores on the top line. EBITDA expected at 2,673 crores, while the profit is expected to see a jump of 11% on a quarter-on-quarter basis, which is not bad, at 2,198 crore rupees. Now, where's the push coming from is indeed the domestic market sales, where the domestic sales have seen a jump of 22% on a YY basis. Average selling price has also been up, and the export have also seen a revival. So all in all, a decent set expected, but going ahead, the festive season sales demand and the CNG newly launched bike, how are the sales penciling in for that, are the key monitorables. Back to you.
So Bajaj Auto is the stock to watch out for. But before we take it across to, Devang, to get a sense on the auto sector, I also want to bring on board my colleague Prakash, because he's joining us with an exclusive now. He understands from his sources that government is all set to expand the list of approved list of models and manufacturers for procuring equipment for some of the renewable companies. Prakash, tell us what exactly is this news flow about?
Yes, an important development coming in for the renewable energy sector, as the government is expanding the approved list of models and manufacturers for procuring equipments. We're given to understand that the amendments have been proposed in approved list of models and manufacturers for procurement of solar PV cells. A very significant development coming in. In fact, the government is expecting that the installed capacity of solar PV cells will increase significantly in next 2 years, and therefore necessary amendments are being made to meet domestic requirement. Along with that, it has been proposed to issue list 2 of solar PV cells under approved list of models and manufacturers, and new list has to be effective from April 1, 2026. Along with that, if you look at the proposed amendments, all projects falling under purview of approved list of models and manufacturers will have to procure equipments from the manufacturers enlisted in the list. However, projects will be exempted from mandatory procurement if the last date of bid submission is before issuance of the order. In fact, the government has also invited stakeholder comments on the draft proposal, and all and the comments will be taken into consideration before finalizing the list. And these efforts are being made to meet domestic requirement of solar PV cells going forward.
Right, okay, that's an interesting, update over there. But take a look at Viatec Vabag. That's definitely one stock which has been holding out quite well today. They've got a sizable order now for a desalination plant, and that stock, while it's eased off from the top of the day, it started off very well. 1692 thereabouts is where that particular stock is right now in trade. Kunal, I don't know how closely you've been tracking the charts of Viatec Vabag, but does it seem like a good buy at this level?
Well, not at this level, but I think it's a fantastic chart. I think the longer term, so I've been tracking this stock since it was, I think, around 300, 350 mark, a couple of years back. From there, the stock had done exceptionally well. There was a point when the stock had broken past about the 200 moving average. That was, I think, in 2022, second half, when the stock was almost at 400 or 450 plus levels. And from there on, the stock has not tested its long-term moving average even once in this last 2.5 odd years. So that itself indicates the kind of strength the stock has seen over the last 1 or 2 years. Now I think at current levels the risk reward could be a bit off, but I think from a investor kind of a point of view, the stock gives that minor corrective phase. So 50 DMA is a support for Viatec Vabag. That level currently is at 1450 mark for the stock. Difficult to anticipate that whether the stock would correct to those levels, but in case if there is any kind of a correction over the next 1 to 2 months and the stock comes closer to its 50 moving average, that's a level to buy.
Okay, point taken. So that's the latest on Viatec Vabag. Devang, any fresh ideas or themes that you have identified in the market? Because we did get a decent amount of correction. Is there any opportunity to buy right now?
I think yes, there are a lot of opportunities and a lot of themes. So I normally talk about power automation type of a theme, or even something like air solutions, which I've spoken in the past. But to tell you the truth, if there is a strategy where you can probably be market cap agnostic, very simple strategy. If I can, your sector itself is going to grow 5x, 7x. That is the size of the opportunity of the sector is huge, and I'll supplement with a few examples. There are sectors like power transmission or power automation, or even something like air compressors, where the industry size is still growing, and it is going 5x, 7x. So just an example in cases air solutions industry, which is right 2,000 crore. There are only 3 listed players available: Kirloskar, Pneumatic, and Ingersoll Rand. So these are 3 companies. The collective ROEs of these 3 companies, blended ROEs, are roughly around 25%. The EBITDA and PAT growth are in excess of 20%, and revenue growth is 16%. We can go to 3 lakh or 4 lakh crore in the coming days. So I think typically these are the type of industries where the size of the opportunity is more. There are limited players that gives market share to the company which is already present over there, and most of these companies are extremely niche and core in terms of their offerings. They have good EBITDA margins. So most of these companies, as I will probably have high ROEs, extremely low debt, or actually no debt. So these are type of companies or sectors which one can look at, because as you know, the markets sort of are not now going to be punishing if your stock picking is not going to be sharp. So I think sector theme and stock picking has to be extremely sharp during such times.
Yeah, absolutely. That's always been the learning in the markets. But Vodafone Idea, that's definitely one stock which is in focus. The promoter, Kumar Mangalam Birla, today on the sidelines of the India Mobile Conference indicated that Vodafone Idea's revival is pretty much around the corner, and they're going to start the capex cycle after fundraising. In fact, it also featured the top industry leaders sharing their vision for the future of technology. We had Bharti Enterprises, Sunil Bharti Mittal, who suggested that satellite companies should also secure network like telcos do. While, of course, we had Akash Ambani as well talk about his vision for telecom as an industry.
Satellite companies who have ambitions to come into urban areas serving elite retail customers just need to take the telecom licenses like everybody else. Be bound with the same conditions. They need to buy the spectrum as the telecom companies buy. They need to pay the license fee as the telecom companies do, and also secure the networks like telecom companies do. This is a simple solution which can be done on a global scale, and India can again show the way in this particular regard.
The company's 18,000 crore FPO, marking the largest of its kind in India, was met with overwhelming enthusiasm. It was oversubscribed 7 times overall and an astonishing 19 times amongst institutional investors. Fundraise has enabled the company to kickstart again its capex cycle. Vodafone Idea has already announced the next phase of capex detail worth $3.6 billion with 3 global partners, Nokia, Ericsson, and Samsung.
The scale and speed of multilingual data generation in India, which will drive the AI revolution, will grow exponentially. We request the government to expedite the updating of the 2020 draft of the data center policy that Indian data should remain in India data centers. Therefore, Indian companies ready to set up AI and machine learning data centers should get all necessary incentives, including incentives for power consumption.
I think with a sense of security that their data, for example, personal information is safe. We don't think it's impossible. In fact, I would say very confidently that it's around the corner. And we've been written off several times in the past. It's about time that now is, we shed that impression about ourselves.
Okay, that's the take coming in. Devang, what about the telecom sector? Do you see a possibility of the 3 players, doing well in this sector, or more likely it's going to be a 2-player market with one being on the sidelines?
I think we are one of the strongest sector in terms of telecom as in India, if I can say, and there are around 1.17 subscribers to be extremely, I can say the size is still rising. The huge opportunity is now in data, and as it is classically said, data is the new oil, or data is the new requirement. And I think more and more people using smartphone, the aspiring Indian coming to the fore, more and more data, more and more transactions getting done through phones. I think this is one market where ideally, if there is this type of a oligopoly, it works very well. So maybe a lot of these companies have reduced their debt. A lot of these companies have taken measures sort of to create the erstwhile problem in their balance sheets. So most of these companies, yes, there are 3 companies only, right from Reliance, of course, via Jio, Bharti Airtel, the pure play on data and telecom, and the third one, of course, being Vodafone, which was a bit in problem. So I guess, yes, this seems to be a market where there are no newcomers coming to be in the near future. Incumbents are going to benefit as the size of the opportunity and the market share of this company. See, it's monitorable that now which company grows their market share and which companies are able to take price hikes. I think most of these companies took price hike a couple of months back, and that has been very well absorbed. So yes, I think this looks like a perfect oligopoly, if not duopoly. And all these companies will be able to survive, and somebody who has a 12 to 15% type of a return horizon can make money by buying Bharti Airtel or such business.
Okay, that's Vodafone Idea. I just want to check in on what JSW Infra as well is up to. They've got a LOI from the Maharashtra government for a port in Palghar in the state. Nuvama has initiated a buy, target price of 390 on this particular stock. They're saying now that they are clearly transforming from port to logistics utility company, and that the strong financial performance is poised to sustain. The stock pretty much holding on to the gains, about 1.25% higher for this one as we speak right now. And Angel One, of course, continues to hold on to its gains. The client base has seen a staggering growth of 11.25% on a sequential basis alone, closing in at the highest point in the day. It's a 19% gain that the stock alone has seen today. but also talk about what the festive fever has done, and it's clearly given a fillip to all sectors alike pretty much, and such is the food delivery and quick commerce business as well. In fact, my colleague Anjali Palod spoke with Swiggy's co-founder Fani Kishan, and he shares with us the kind of incremental growth that they've had so far this season.
Some of the cities that we operate in, I would imagine more than 25% of the population orders from us on a monthly basis, right? So pretty big scale in which we operate. And I mean, the festive season has been getting much bigger as the years have gone by. I think we've probably done more than 2 or 3x of the sales of the Dandiyas, of course, which is a pretty big thing during the festive Dashera occasions, right? And whether it is, for beauty, whether it is for festive essentials ranging from books to, torrents, I think we have them all, and we've hit new highs in every place as the festive season, even just starting off, right? I think we have Dhanteras coming up, we have Karwa Chauth coming up, we have Diwali coming up, of course, not to mention New Year, so we expect it to become even larger as the next few weeks come by.
Right. So also a lot of people are, quick commerce is all the rage. Lots of e-commerce companies are now attempting same-day delivery, setting up their fleet to do that. How do you see your market share? Do you feel like it's going to be threatened, or what does it look like for Swiggy?
Yeah, I think the one thing which I want to say is in India, competition is everywhere. I think that's what truly makes us who we are. People keep asking, hey, how did, for example, category like quick com take off in India? I would actually say it's because of the incredible competition that we've had, right? And at an early stage like this, it is not about market share as to how much are we gaining from someone else, as opposed to how much the market itself is growing.
Perfect. Also, an IPO is coming up for Swiggy. The issue size has been upped. Some ESOP disbursement has happened. What does the environment look like at Swiggy, and any key developments in that area?
Yeah, I mean, I think obviously you did say what you said, right? For us, it's business as usual. It's an important milestone for us, but if you go back to the office today, I don't think you'll see anyone worrying about the IPO. Our job is to keep our heads down, deliver, do the best for our consumers, give the unparalleled convenience, as our vision says, and that's what we are on about at this point of time.
Okay, so that's another IPO that we're watching out for. Swiggy perhaps around the corner. The street chat has suggested it's likely to happen in the month of November. Let's see how it really progresses. But the one which is open, and it's open pretty okay, that's one is Hyundai. Let's take a look at the latest subscription figure, because I remember the ones till 12 p.m. the overall subscription was around 10%. Right now it's 16%. Of course, it will pick up over the course of next couple of days. But is it something which is a bit of an unmissable kind of issue, or is this something that you should perhaps keep for the long term or completely avoid? That's the question we have been asking the experts. Here out their take.
Consider maybe Tata Motors, M&M and Maruti. So Tata Motors has a JLR as a leg, which is the largest of the pie. And for M&M, it's largely the tractors and some of the parts which comes into play. So I think we really don't have much of a choice when Hyundai is kind of a direct comparison to Maruti. And some of the positives which stand apart from Hyundai vis-a-vis Maruti has been the higher share of SUV sales, the higher margins that they realize, and as well as the greater share of export that they do. Hyundai is an option. You can see a good amount of shift happening from institutional side, from maybe Maruti to Hyundai. Even they have a superior product slate, their margins, the return ratios are better. So I feel it is here for a good term, and it's a decent issue to subscribe to.
So I think it's a decent stock for a long term. No excitement, nothing immediate what we are seeing with IPO. So there's no compulsion to subscribe to an IPO. I would be happy if I get it a little cheaper from current, let's say 25, 26 times. But overall, I think a very steady company with the realistic expectations, if you have, you may add in the portfolio. One good thing, however, is that it's probably the only player which is strong in each powertrain. So you have the IC platform. They are launching 2 CNG variants this year. On EV, they already have 2 models, which is iNix and Kona, and they probably will come with Creta EV, which I think Creta has been one of the best-selling UVs, and if they can come up with a nice EV variant, that can give a bit of a fillip to the numbers.
With the capacity increase now in the pipeline, new EV models which are being planned, I think if you look at the medium to long term, the issue continues to look attractive. But given the fact that it is coming at around, say, I think 25, 26 times trailing, so it's not a very cheap IPO. But I think for the investors who are ready to take, say, medium to long-term viewpoint, they will definitely end up making money. So
there is no bullishness in this story. It is just a story created by the Indian public. For what reason, I don't know. Because there are 8 or 10 global listed auto companies, and you can see what has happened to them in the last 3 months, 6 months. Every one of them has warned. One of our bigger companies in India is basically 50-60% exposed to the same market. How can it be that 9 out of 9 companies warn? Our company doesn't warn, but says that we will close down the plant because there is too much inventory, but in the long run we are bullish. Overall, I think that auto is one of the worst sectors to invest in, and I think that the IPO, this new IPO, will most probably on listing will be plus minus par.
I think that this is a huge issue, but we said the same thing when LIC came, and that got swallowed. I think this will also get swallowed. It's a good IPO for India. And I think that it will probably take money away from some of the other companies like Maruti and M&M and Aisha and all the other companies. But I think that at the end of it all, we do need more. And this is good quality paper, and it's a company that's doing well. So why not? And it'll be like Maruti, where Maruti gets half its earnings, more than half its earnings from Maruti India. Hyundai could actually end up being the same place with them.
It is an OFS, let's remember that. Nothing is coming back to the company. But I think the numbers so far have held up pretty well. So I think the product launches, the volumes, the top line growth, the margins have been reasonable enough. And to a certain extent, I think if an investor has a medium-term view, we can subscribe to the IPO. But I've also got an equally important point to mention that Maruti in the same breath, right? The mid-segment cars that they operate out of, the expectation largely is that they should recover their market share over the next few quarters. And there is not much of a valuation gap between Maruti and Hyundai. Maruti gets a sort of a premium valuation for all these factors. So Maruti also should remain on your watch list.
I would like to, recommend and even try to buy Hyundai post-listing. I don't really invest in IPOs. It's a big waste of time, but Hyundai, if you get it at a good price, is something you should buy and hold in your portfolio. This is a sector which should do really, really well going forward. So yeah.
Okay, and let's wind it up then on the show, and let me hand it over to Snehi for the closing trades.
Well, absolutely. Let's take a look at how today has panned out when it comes to the move on the Nifty. Rather lackluster and a little surprising, because in the morning we had a gap up open where we've opened above 25,200, and right now Nifty close to the 25,100 level, but well below it, and it's just a 2-10% drop coming in on Nifty. Sensex also in tandem, slightly under pressure is where the Sensex is as well, a 110% cut coming in on Sensex also. Let's take a look at the broader markets, because some real strength has been seen coming from the broader markets. While the mid-cap index did not do much, rather flat 0.2%, but in the positive nonetheless. It was the small-cap index today that stole all the attention on the street, because 1.1% gain coming in on that index, and that's been a real outperformer today. If you take a look at the advance decline ratio, very evenly split between the advances and the declines, but slightly nominally in the favor of the declines more than the advances today. Let's pull up some more stocks today and talk about some individual newsmakers in today's trade. First up, let's talk about the earnings reactions coming in on HCL Tech and Reliance. HCL Tech was a good set of numbers, and the stock also held up pretty well in today's trading session, almost 0.5% gain coming in. However, Reliance was a flat set of numbers coming in this time around, and the market did not react well to it. A 2% cut coming in on Reliance, and that is in fact also what weighed on the Nifty today as well. Now, on the back of some brokerage notes, JSW Infra was in focus also because they have tied up with, they've got that letter of intent from the Maharashtra Port Board, and also Nuvama has initiated a buy rating on that stock, so 1.3% higher. Angel One was an earnings candidate yesterday, and the street has reacted phenomenally to that stock, because that stock also was at 1.14% higher, and well, closing the day with 18% gain coming in for Angel One today as well. Viatech were back on the back of an auto win, did well. You had CESE, Lupin, HDFC Bank was on the back of a Jefferies note. That stock also was rather lackluster in today's trade. You had a Macquarie note coming in on the entire financial basket of the likes of Bajaj Finance, Shriram Finance, HDFC Bank, ICICI Bank, all of these stocks were in focus on the back of this Macquarie note. But let's take a look at some sectoral gainers and losers in today's trading session. You had Nifty Realty, that was an outperformer in today's trade, led by Soba, Brigade, Phoenix, Prestige, Godrej Properties. However, on the flip side, what did not do well today was the entire Nifty metal pack, because you had the likes of SAIL, Jindal Steel, NMDC, Hindalco, Vedanta, Tata Steel, all of these have weighed on the metal pack today as well. However, media, FMCG, Nifty, Bank, all of them stuck to the green in today's trading session. What did not do well along with metal was Nifty Auto, Nifty Energy, Pharma, IT and PSU Bank. All of these indices have ended the trading session in the red today. But let's also pull up the stock of Bajaj Auto, because the results are expected tomorrow, and that stock was not holding up really well in today's trading session, also weighing on the Nifty. 3% cut coming in on that stock. But well, yes, this is what the market breadth has looked like today. This is how we are shutting shop. Nifty above the 25,000 mark, but below the 25,100 mark today.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.
Hyundai Motor India Limited now proposes an initial public offering of its equity shares. The 100% book built offer is being offered at a price band of Rs 1,865 to Rs 1,960 per equity share of face value of Rs 10 each. The anchor investor offer period opens and closes on Monday, October 14th, 2024. Offer opens on Tuesday, October 15th, 2024. Offer closes on Thursday, October 17th, 2024. For risk involved and other details, please refer to the red herring prospectus, which is available on the website of the company, SEBI, BRLMs and the stock exchanges.